Over the past few weeks, one topic has continued to create confusion throughout the XRP community. Many investors still believe Ripple's biggest rival is Swift, but when you look deeper into how the global financial system actually works, that assumption becomes much less convincing. Today, we're going to break down comments that Ripple CTO David Schwartz made several years ago that are becoming more relevant than ever. Once you understand the difference between payments and settlement, you'll also understand why Ripple has been building something completely different from what most people imagine. This isn't just about blockchain, XRP, or cryptocurrency. It's about the future design of the global financial system and why Ripple may have positioned itself years ahead of where traditional finance is only beginning to move today. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Let's begin with the discussion surrounding Swift. Recently, Swift announced new blockchain initiatives and pilot programs related to digital assets and blockchain-based financial infrastructure. Naturally, many people immediately concluded that Ripple finally has serious competition. However, one statement from Swift's own leadership changes the entire conversation. Swift's chief innovation officer made it clear that Swift does not actually perform settlement. That single statement explains why so many people misunderstand Ripple's business model. Ripple was never built simply to send payment messages faster. Its core mission has always centered around settlement and liquidity. Those two areas are where XRP and the XRP ledger provide their biggest advantages. David Schwartz discussed this years ago when Swift was improving parts of its own payment messaging network. His response was incredibly interesting because instead of treating Swift as an enemy, he welcomed faster payment systems. He explained that Ripple's strategy was never about dominating payment messaging itself. Ripple wanted XRP to become the settlement asset underneath those payments. This distinction is incredibly important. A payment and a settlement are not the same thing. When most people transfer money internationally, they assume the payment itself means the money instantly changes ownership. In reality, that's often not what happens. A payment message is essentially an instruction or promise that money will arrive. The actual settlement, where ownership of funds truly changes between financial institutions, frequently happens much later. Sometimes that process can take several business days, depending on the countries, currencies, correspondent banks, weekends, holidays, and banking hours involved. That delay creates enormous inefficiencies throughout the financial system. Imagine thousands or even millions of payment instructions flowing around the world while the actual money has not yet settled. Financial institutions are effectively relying on promises and obligations waiting to be reconciled later. The larger those outstanding obligations become, the greater the overall financial risk becomes as well. If one participant experiences liquidity problems before settlement occurs, it can create ripple effects across multiple institutions. Ripple recognized this weakness years ago. Instead of focusing only on making payment messages travel faster, Ripple concentrated on making the actual settlement happen almost immediately. XRP can move value across borders within seconds while operating continuously 24 hours a day, 7 days a week, including weekends and holidays. Traditional settlement systems simply cannot offer that level of availability or efficiency. David Schwartz once explained that Ripple developed products like Xcurrent because payment systems themselves were so outdated that improving settlement alone would not have been enough. If payments remained extremely slow, then fast settlement could never fully demonstrate its benefits. So Ripple helped improve payments while always keeping settlement as the long-term objective. That is why Swift and Ripple are not necessarily fighting the exact same battle. Swift specializes primarily in financial messaging. Ripple focuses on settlement and liquidity. Those are different layers of the financial infrastructure. Faster payment messaging actually increases the need for equally fast settlement. Otherwise, payment instructions begin piling up, while the underlying transfers remain delayed. Many people continue comparing Ripple and Swift directly, but perhaps the better comparison is between Ripple and the institutions responsible for clearing and settling transactions after those payment instructions have already been sent. Those include some of the world's largest financial institutions and money center banks. These organizations have managed settlement infrastructure for decades, but changing systems that have existed for generations is incredibly difficult. History consistently shows that established institutions often struggle to innovate as quickly as specialized technology companies. Large banks maintain enormous legacy systems that were never designed for blockchain-based settlement. Anyone who has interacted with older banking software understands how outdated many of these platforms still are. Replacing decades of infrastructure requires time, investment, regulatory approval, and significant technical expertise. Ripple, on the other hand, has spent years building specifically for this challenge. Rather than adapting old systems, the company designed technology around blockchain from the beginning. That allows Ripple to innovate faster while concentrating engineering resources on one specific problem: improving cross-border settlement. Another point worth remembering is timing. Today, many financial institutions are only beginning blockchain pilot programs. Meanwhile, Ripple has reportedly spent years working alongside central banks, regulators, payment providers, and financial institutions around the world. While others are entering testing phases, Ripple has already accumulated years of real-world experience. Whether every pilot ultimately leads to production remains uncertain, but the difference in maturity is difficult to ignore. Instead of viewing recent announcements as negative for Ripple, some investors see them as validation. For years, blockchain technology was dismissed by many traditional financial organizations. Critics argued that digital assets would never become relevant within mainstream finance. Now, many of those same organizations are actively exploring blockchain solutions themselves. That shift doesn't automatically guarantee Ripple's success, but it does suggest the industry increasingly recognizes blockchain as a legitimate technological direction. Imagine spending years developing technology while competitors insist your approach will never work. Then suddenly those same competitors begin building similar systems. Even if competition increases, their participation also confirms that the original concept had merit all along. That's exactly why many XRP supporters view recent institutional blockchain initiatives as positive rather than threatening. Now let's shift our attention toward XRP's price action, because this is another area generating enormous discussion. Despite improving fundamentals, XRP has continued trading within a long-term accumulation structure that extends back several years. Some investors interpret this prolonged consolidation negatively. Others see something entirely different. There is an old market saying, "The larger the base, the higher the eventual move." Supporters of that idea argue that long accumulation periods often provide stronger foundations for future trends. Of course, no chart pattern guarantees future performance, but many analysts continue monitoring these long-term structures closely. From a technical perspective, many observers also point toward long-term momentum indicators. According to this viewpoint, monthly RSI readings are sitting near historically depressed levels. Outside of the sharp market dislocations experienced during the COVID-19 crisis, current momentum conditions appear among the weakest seen in years. Some analysts even argue that today's technical setup looks more compressed than periods surrounding major crypto collapses like FTX. At the same time, speculation continues surrounding Ripple's broader regulatory ambitions, including discussions that the company could potentially become a nationally chartered bank if future approvals materialize. While these developments remain speculative until officially confirmed, supporters believe they strengthen Ripple's long-term strategic position. Sometimes charts become easier to understand by removing emotional bias. One interesting technique involves viewing the exact same price chart upside down. Although the data remains identical, our perception often changes dramatically. Looking at the inverted version can make it appear as though the market is preparing for a major breakdown. Since the chart is inverted, that visual breakdown would actually represent a powerful upward move in XRP's real price. This exercise doesn't predict the future, but it demonstrates how psychology influences chart interpretation. Ultimately, technical analysis alone cannot determine what happens next. Markets are influenced by countless variables: broader economic uncertainty, institutional positioning, hedge fund activity, macroeconomic events, regulations, liquidity conditions, and investor sentiment all contribute to price movements. Sometimes a temporary decline has nothing to do with the underlying technology itself. What continues attracting long-term supporters is the growing gap between price performance and fundamental developments. Ripple has expanded partnerships. Blockchain infrastructure continues receiving greater institutional attention, regulatory conversations have evolved, and enterprise blockchain adoption remains an active area of investment. Yet, XRP's market price has not always reflected those developments. Supporters argue that if fundamentals continue strengthening while prices remain relatively depressed, the potential upside becomes increasingly asymmetric if their long-term investment thesis eventually proves correct. It's also important to recognize that the cryptocurrency industry itself has evolved significantly. Earlier market cycles were dominated by retail speculation, meme coins, NFT excitement, and short-term trading. Today, the conversation increasingly includes tokenization, institutional custody, cross-border payments, stablecoins, regulated digital assets, and blockchain infrastructure for financial institutions. If global finance truly moves toward institutional blockchain adoption, projects specifically designed for enterprise utility could potentially receive greater attention than purely speculative assets. That does not guarantee XRP becomes the biggest winner, and there are certainly risks involved with any investment. However, many supporters believe Ripple is better aligned with this new direction than it was during previous market cycles. Financial institutions that once ignored blockchain are now prioritizing digital asset strategies, and that represents a meaningful change in industry sentiment. No one can accurately predict whether the broader market fully recognizes these developments next week, next month, or even next year. Timing remains one of the most difficult aspects of investing. Markets often take much longer than expected before reflecting changing fundamentals. Nevertheless, history repeatedly shows that transformative technologies frequently experience long periods of skepticism before widespread adoption eventually occurs. Many investors expected blockchain adoption to happen much faster. Regulatory clarity took longer. Institutional implementation required more testing. Development cycles stretched further than anticipated. But delays do not necessarily mean the overall destination has changed. For those who continue believing Ripple's long-term vision, today's environment represents another stage in a much larger transition rather than the end of the story. As always, remember that none of this should be considered financial advice. Every investor should conduct independent research, evaluate both the opportunities and the risks, and make decisions based on their own financial situation. The coming years will likely determine which blockchain platforms truly become part of the global financial infrastructure. Whether Ripple ultimately fulfills that vision remains to be seen, but there is no question that the conversation surrounding XRP, institutional adoption, settlement technology, and the modernization of global finance has become more important than ever. Thank you so much for watching, and I'll see you in the next update. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. Thank you for watching.